Morning everyone, thanks for tuning in today. Today we'll have a company initiation report on SHS Holdings, followed by company results by Dasin Retail Trust. So we have initiated a report on SHS Holdings with a buy call target price of 29 cents. Last close was around 23.5 cents. This represents an upside of around 20%. SHS generates revenue from two existing segments, corrosion prevention and structural steel. Corrosion prevention is needed to lengthen the lifespan of metal structures, which is done by using different blasting methods to remove damaged paint and applying fresh coat of paint. The segment services the marine vessels in the oil and gas sector. Structural steel is primarily engaged in the business of designing, engineering and construction of steel, aluminium and glass structures. Projects include the SMU Law Library, which will be shown in the slides later. The structural steel segment is currently the largest revenue contributor to the group. However, we expect future growth to be contributed by the two new businesses, which is modular construction and solar. For modular construction, it is operated under its subsidiary TLC Modular, which is based in Vietnam. It manufactures steel prefabricated pre-finished volumetric construction PPVC and prefabricated bathroom unit PBU. I'll go through this in details in later slides. I will be using modular construction and PPVC interchangeably, as essentially they mean the same thing in case you get confused. For the solar segment, Sin Energy, a subsidiary, has secured a major project in Bangladesh, which I'll go through in later slides as well. So these are the key investment theses for SHS. We expect New Zealand housing market to be the primary growth driver for the modular business. We also expect a steady stream of revenue contributed by the solar project. And lastly, with the recovery in oil prices and construction sector, this will help improve the legacy business of the group. So modular construction is a process where a building is constructed off-site in a controlled factory environment, later to be transported on-site to be pieced together into a building. You can think of it as similar to stacking Lego pieces together. Figure 3, you can see the cumulative shortfall in housing just in Auckland is close to 44,000 from 2008 to 2017. In later slides, we will discuss why New Zealand is experiencing such a shortfall. Also in figure 4, you can see that there are two types of PPVC, reinforced concrete and steel. TLC constructs steel PPVC, which is lighter than concrete, which give them the ability to export their products to New Zealand at a lower cost. The construction will take place in factories in Vietnam and then shipped to New Zealand and transported by trucks to the site. We will first address why there is a shortfall in housing in New Zealand and the advantages of using PPVC product, which translates to a huge demand. So after the housing crash in 2008, there was a halt in construction which didn't really recover. To make matters worse, there was a shortage of labor, which in turn increased construction costs. Just to put things into perspective, Auckland alone would need additional 9,000 workers to support the demand in construction sector. Furthermore, we saw an influx of migrants over the years, which increased the demand for homes. Figure 5, we can observe the supply has not been keeping pace with demand being at 18,000 and supply at only 10,000. And this is only in Auckland. To address the shortfall, the Ministry of Social Development targets to add more than 3,500 homes to Auckland public housing over the next 2 years and 72,000 homes by June 2020 for the whole country. As a result, we expect TLC's PPVC product to be in demand, and I'll go through the reasons in the next slide. So let's understand the value of PPVC in the New Zealand market. Number one is of course speed. Because modular construction can occur concurrently with the site and foundation works, projects can be completed 40% faster than traditional methods. And as I previously mentioned, since 90% of construction is completed in factories, this mitigates risk of weather delays, and also the repetitive nature of PPVC improves the efficiency and quality to a large extent. Number 2 is the manual labor cost in New Zealand on average is US $20 compared to Vietnam at only US $7. This enables TLC to be able to price their PPVC products competitively. And lastly, timber is the raw material normally used for residential construction in New Zealand. PPVC products offer better structural integrity as compared to the conventional way of construction in New Zealand. In figure 6 shows the manpower savings of PPVC. You can see as we go up the level of using prefab, the more savings you get. The extent of PPVC for TLC products is highlighted in the red box. Figure 7 also shows the other advantages of using PPVC. So these are the pictures of projects TLC is currently working on. The Costa Hotel is estimated to complete second half of this year. So let's move on to solar. In Bangladesh, Sin Energy has secured a 50 megawatt solar farm project with the Bangladesh Development Board to provide 20 years of electricity at US 17 cents per kilowatt hour. We expect construction to be completed in FY19. We expect project will generate yearly revenue and earnings of $14 million and $4 million respectively. Sorry. Figure 10 shows the key assumption for the project. We factor in a 1% decline of operating efficiency because of the required maintenance to maintain the project. This is standard across the industry. For the legacy business of SHS, recovery in oil prices will positively impact the group as the corrosion prevention segment services the marine oil and gas sector. We also observe a rebound in overall construction contracts awarded in Singapore, and this will be supportive for the structural steel business. To end off, we have a buy recommendation with target price of 29 cents. We are pegging SHS to other construction companies with prefab and structural steel business in Singapore. Our target price is based on 10 times FY19 PE. We gave a 10% discount on SHS to its peers as we take a more conservative approach in SHS valuation. And that's all from me. Thank you. I will now pass on to Tara to talk about Dasin Retail Trust.
Thanks, Alvin. Morning, clients. This is Tara. I'll be sharing an update on Dasin Retail Trust, covering their 1Q18 results as well as our site visit to Zhongshan last week. Gross revenue and MPI were within expectations, with revenue and MPI increasing 85% and 86% respectively. This was mainly attributable to the contribution from Shiqi Metro Mall, which was acquired in June last year. Higher reversions from renewal from master lease were recorded in this quarter, as there was a 10-year renewal of the Xiaolan master lease agreement for Superior City department store. There were a higher amount of funds retained for future interest repayment. This was actually adjustments for funds set aside for future repayment of interest and related costs of loan facilities. We maintain a buy with a lower target price of 97 cents. We narrowed down our DPU forecast mainly to factor in for these increased distribution adjustments, which was initially not factored in our previous forecast. So a pertinent question on investors' minds would be the removal of income support after FY 2021. So the current income support in place is in the form of a distribution waiver, where Dasin's two biggest shareholders, Aqua Wealth and Bounty Way, have waived their entitlement to dividends for the first 5 years, from FY17, which is the year of their IPO listing, to FY 2021. So FY 2022 will be the first year without income support. Income support has historically and traditionally been thought of as the short-term prop-up of share price. However, this income support was strategized to smoothen out gestation periods for the two growth malls, Dasin E-Colour and Ocean Metro. Our forecast, which is purely based on organic growth and not accounting for any acquisitions or disposals, shows that Dasin's distributable profit is expected to sustain this removal in income support, short of some 6%, which can potentially be compensated for by any acquisitions made within this same time frame. So I'll share a bit about our site visit to Zhongshan last week. Before I go into that, just a recap of their assets. Their current portfolio consists of 4 assets: Xiaolan Metro Mall, Ocean Metro Mall, Dasin in Colour, and Shiti Metro Mall, which are all in Zhongshan City. Their ROFR pipeline consists of 20 properties over 4 cities: Zhongshan, Zhuhai, Macau, and Foshan. So some highlights from our site visit. Dasin sponsored Dasin Real Estate Company is actually the retail market leader in Zhongshan. Total assets, including the 4 current portfolio assets as well as the ROFR assets, represent more than 50% of total NLA in Zhongshan. So this shows their clout within Zhongshan's retail market. We were particularly impressed with the fact that the sponsor had been asked to manage malls or retail outlets for other organizations, including competitors and local government. This is testament to their operational expertise. The malls were well frequented through weekdays and weekends. We were there over Thursday to Sunday. There was healthy footfall for all 4 malls and the 2 developed ROFR malls that we visited. A key thing to note would be there's 100% occupancy for all 4 malls with virtually no border up units, and there are no gaps between the lease expiries and new lease sign-ups. So a mall is only as successful as it goes with the tenant mix. Dasin has been working closely with tenants to work out specific issues, and their track record can be evidenced by its quality tenant profile, which includes McDonald's, Starbucks, Watsons, and Chow Tai Fook. We were there on 20th May, which translates to Wu Erling, which constitutes one of China's Valentine's Day, and we saw how the malls were able to capitalize on this event to draw up promotions and events to attract footfall, as you can see on the image on the right. Outlook-wise, we continue to foresee healthy organic growth, as well as inorganic growth, which will be through its ready pipeline of 20 properties. As Zhongshan is in the heart of the Pearl River Delta region, we foresee robust growth, as can be evidenced by their increased purchasing power, with urban disposable income per capita rising 8.9% year-on-year in 2017. Another catalyst would be the expected opening of the Hong Kong-Zhuhai-Macau Bridge in July 2018, which can potentially create some spillover of consumption spending to Zhongshan, and in the longer term potentially raise rental rates and property valuations for Dasin. With that, we conclude our presentation, and I'll pass it on to my colleague Amir, who will talk about the logistics for next week's webinar. Sorry, we will proceed with Q&A first before moving on to talk about next week's webinar logistics. Hi, since there are no questions at the moment, we will go back to talking about next week's logistics.
Hi everyone, this is Amir here. So we have announcement to make. From next week onwards, we will be using Zoom webinar instead of GoToWebinar for our weekly market outlook. So two things you need to do. Firstly, you need to register for our weekly market outlook for next week. Two ways you can do it, which is on the screen now, the QR code you can scan and register, or later we'll be sending out an email to all registrants of the weekly market outlook, and you can use the registration link in the email to register for the weekly market outlook. If you have been using mobile device to tune in, you can download the Zoom. You need to download the Zoom app in the Apple or Google Store before the webinar to tune in using your mobile devices.
So if there's no further questions, we will end today's webinar. Thank you for tuning in.